following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back, and I hope you guys are having a good morning. I was watching something on the tube here. I ended up getting up about. My sleep is still screwed up from my jet lag. It takes me seemingly weeks to get on the right schedule, but getting up in the middle of the morning, just reading news stories is my hobby now. In the middle of the morning, meaning 3 or 4 a.m. I was watching something about startups this morning, and this incubation center or whatever they call it in New Jersey, that's basically housed to, facilitate lowering the overhead of a kind of a think tank type environment for startups. They do that in Hong Kong. There's something they call Cyberport there. It's probably got at least 200 to 300 startups in it. It's all government funded. It's a very cool situation. I think the fact of the matter is, a very high percentage of people that try to start a business actually fail. So this is a real cool, way to try to mitigate those percentages, but everybody can't win, as you guys know. And it's interesting doing business with those guys because we do business with, some of them in Hong Kong, and it's always a tenuous situation. We always try to get retainers and a couple of months up front to even do anything for them because they're apt to blow up at any time. So it's a stressful situation for those folks, and mainly those are surrounding, obviously, writing apps, writing software, finding little niches that they can take advantage of. But it's interesting dealing with them. I don't know if you guys have been watching the tube lately at night. I mean, I just got to say this. I mean, people are dying overseas that wear our uniform, fighting for this country, and we're somehow lamenting over a girl who can't listen to a cop, do what he says, and then goes and commits suicide in jail. That's on her books, and I have no idea why we're spending time on this or even thinking about it, to be honest with you. Do what a cop says and ask in a polite way. I think everything's going to be okay. 99.999% time, 99.9% time of the part of the time. Excuse me. I tell you what, we're going to get right into. Let me get my screen right here. We're going to get right into the S&Ps really quick. And one of the things that, has obviously been concerning is just the flip-flopping around of the breadth. It's just, there's no conviction to really get into these S&Ps long with any type of conviction at all. Here's the S&Ps. I know we're sitting around all-time highs again. It's a tenuous situation to try to short this, but we have really been blocking out the long side. And as we look at this on the weekly, we talked about yesterday this, area of 2102, 2104. We had to pay attention to and wait for that to have at least a close below there to really get some legs on the short side. Hopefully, right now we talked about that was just something pre-market. We talked about 2102, 2104. There's that POC on the daily. Unfair high on the weekly, 2104. This is 2102 rounded off. So what do you do with this now? We talked about not shorting down here and just waiting and see if we're going to do a little bit of a sympathetic bounce off of those numbers. Here's the 240. So here's what I'm looking at. I'm still looking at breadth situations that are not that friendly to the long side. And we've got short-term resistance around 21.13.14 here. That would be kind of short stops for shorts above. Again, you got 2104 sitting down here on this time frame also. So again, these are going to be the initial targets. If we rattle around down here and kind of consolidate around this area, 2102, 2104, that's going to be the time, in my opinion, to possibly sell some breakdowns below 2102, 2104 based on that alone. But right now, that's the picture, and we got to pay attention to what this is saying. And, I like to look at the 240 crossovers, still negative here. 60s are a little bit more immediate, but here's the daily situation. We crossed over negative yesterday. The weeklies have kind of stayed negative for the most part since June 4th, looking for opportunities to sell. And the scanner's been picking out some really good short opportunities in this type of environment. So what we've been talking about is just, again, to beat a dead horse. We've been talking about trying to find opportunities in the internals of the S&P 500, weak instruments to sell in this type of environment in case the market does pull back, which we think that's a good possibility. But if the market goes up, it won't be that painful to be in those particular weak instruments, which have been defined by the profiles here. So again, that's enough about the scanner. We got a lot to talk about today. Let's go right into a couple of stocks with earnings that we want to just kind of map out for you here in case you're trying to trade them. Let's just go down the list. BMY. I think we got the big thing today is Bloomberg Consumer Comfort Index. Initial jobless claims at 8:30. Here we go. So Bristol Myers, again, the drug stocks win. The healthcare sector wins. This is something you want to not pay attention to from the short side. I know we've got, and we're trading 71.50 right now, but again, this has been the long-term weekly. This is the daily. This is a good example of things not to short. And also getting into earnings, you more than likely want to sit on the sidelines until those come out, trade the reaction. And again, this kind of bores that concept out. So, XLV is still a really, really powerful situation. I'm going to pull that up really quick. We've been talking about, leave this alone. Things on their highs go higher. Do not short this. This is put a gun to my head, force me to buy things. This is the sector that we would be looking at to buy XLV. And then, the earnings are pretty good on BMY in particular. But here's the ETF situation. That's the 1 hour. Here's the weekly. And there's the XLV ranking the ETFs relative to long-term profiles. And again, the long-term trend is up, obviously, on this one. XLE is down relative to profiles. That's no mystery to anybody. Some people are probably rolling their eyes after I say that right now. But you can find all the inflection points you need on all the internals and the ETF itself. So it's something very handy to always have in mind there. Let's take a look at a couple other things. Caterpillar. All right, so remember our daily charts are not going to reflect on e-signal. That's what we're using here. Pre-market pricing, 77.50 is where we're at right now. This is obviously dollar significant, and now we're trading pretty much below recent all-time lows here. Not all-time lows, but recent lows. 77.50 pre-market. So here's our daily. So again, I don't think this is one to buy on sale here. You're probably going to have more of a whoosh sound below these lows. This is our daily chart. Again, you've got better opportunities out there to buy. And our 240s, if you're going to play around with this, at least let the scanner spit something out. I'm going to go back into my dashboard. I'm going to go back to Caterpillar. Here it is. I want you to at least start seeing, and before this announcement came out, again, we don't want to play these things, but red across the board. But you want to wait for new profiles to come out to try to let the market come to you or show you where the new balanced area is for these particular type of instruments with this volatility that's now happening after the earnings. So what do we want to do here? Excuse me, I just lost my train of thought. Here we go. Let's take a look at Apple really quick. This was obviously something that had come out with earnings. We talked about this yesterday morning, 121.50. I just want to kind of bring that up. Pre-market, I mean, obviously we went down to 119, but this is kind of where we're at during the show yesterday. We were, I think, right in here somewhere. Is that where we're at? Yeah, right in there. So we talked about, it's obviously going to have some volatility around the inflection points, especially with a 7% move down pre-market. But this is the net result of this. We talked about possibly a little bit of a bounce opportunity and really a high probability situation to play around with that 121.54. If you guys played that, you picked up about 4 or 5 points there, or maybe 3 or 4 points. But again, this is kind of cool because profile appearing already since, overnight, or excuse me, at the end of the day, and profile appearing on a short-term 240s above price action. That is a really good sign for the bears here. And I think that now you could look at this. Let me just pull this up. This is our weekly. Getting back down below, just because that immediate knee-jerk reaction there, getting back down below 124.70 would be a chance to kind of sell this a little bit. And pre-market, I don't think we're out yet. 123, yeah, we are. So we're trading 125.87. So I'm not a big fan of just going long with this because I think the broad market has got some issues. So therefore, I'd be looking at this to try to sell some weakness below 124.70 if you're going to trade Apple. That's the way I'm looking at it. You've obviously got better shorts out there than this. You look at this and it seems like we could have some technical damage. With the earnings and a couple of other things we're looking at, it's, we've made higher highs in here. We've made lower highs on Navigator. It seems like it could be cracking. But again, 124.70 is the number. And you, again, more than likely got better shorts out there than this one. This is kind of playing with fire, so to speak. All right. Let's look at the dollar really quick before we head to break. I'm a big fan of being long this. Here's the weekly. Here's that profile fair auction, if you will, coming back down into the POC 96.70. And that coincides with our previous unfair high. So I'm looking at that as a little bit of a support area, 95.70, or excuse me, 96.70. Did I say 95.70? 96.70. And that's what I'm looking at to try to pick a battle on the long side with stops below on the U.S. dollar. Euro and dollar, a little bit of, 30% of the dollar is comprised of the euro, maybe a little bit more. So a little bit of inverse reaction here. We're going to talk about that a little bit. Coming up into some nice little resistance here on the euro, and the dollar's coming into support. So might have a little bit of that scissors action that we can take advantage of there. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Some stuff's popping up on my screen here. Sorry about that. Let's take a look at Intel. This is something we're going to just kind of peruse through really quick. Long term on Intel, here's kind of the way I haven't been looking at this in particular individually. I have been looking at the tech sector, the Excel. Okay. 3203 was kind of a big number on, and still is on the long term. So, as we look at this, one of the things I'm also looking at, and we don't try to throw too many things at you here. I actually don't like to throw the whole kitchen sink at doing analysis. So what I do primarily is just look at my zero line on Navigator down below when I talk to you guys about some of the attitudes of some of these stocks. And I also use divergent price versus, lower highs. What am I trying to say? Higher highs in price action, lower highs in Navigator, things like that. Right now, we've got a pretty good conducive situation here. We got lower lows on Navigator, and we're below the zero line as we started showing, and that was the reason, we could look at some of these areas of selling resistance. But I also look at the broad market as kind of a relative strength trading system on top of this. So, the first thing I do is I kind of go in here and I kind of figure out which side of the market I want to be on by looking at the breadth situation and say, as Basil coined at one time, I just can't stop saying this. I love it. The tide of the marketplace with the, what are the internals telling you in a non-weighted fashion? What's the pack doing versus the leaders, and are there disconnects? Are there concerts here? This is non-directional at best on the S&Ps right now. And when these things start happening, it's usually kind of a whoosh sound at some point will enter the equation on the downside. So that being said, I'm looking for opportunities mostly to short. Are there some great long opportunities out there? Without question, they show their hand also, but some of the kind of etheric rises in the market lately, in the broad market, have allowed us to kind of find things that are, shining a little light saying, sell me, sell me. So, this has been one. Obviously, I haven't had this on the radar screen. So, obviously everything kind of going together here with what we just talked about. So the breadth, the profiles, the navigator situation on the long term, and here's the daily. So again, that weekly gives you that breaking point. Then the daily kind of regulates the trade down, so to speak. So this was a really, really bad sign a week or so ago when Intel gaps up and then sells off and gets right back into the fair, explores the entire fair auction in one day, by the way. And that inflection point, on the bottom, let's just see, the low was 29.40, and then the bottom of the box is 29.03. So we got very close to that in the neighborhood, bounced up. So, not staying above the fair auction was pretty big. And then now we've really shown our hand relative to the market. So how do you trade this? So right now, you kind of got to keep turning the wrench the same way until you're told differently. I think you're told differently with any rallies above 30 right now. And also, short, stingy shorts should kind of put stops above 29 here, 29.03 to be exact. So, you can kind of drill down into the scanner, find Intel. If you don't have the charts here, and there it is, and there's the levels we just spoke of, 30.08, 29.03, there's the 32.03 breakdown initially, and there's some 240 information. But the fact of the matter is, if you're trying to find weak stocks in a market that's kind of drifted higher a little bit lately, this has been on the radar screen. This is double red. This is a heat map, dark red, light red. You can read about this over here. And get all the information that I just spoke of looking at the charts. So still think it's a sell. Obviously there can be some bottom fishing. Here is the 240s, nothing real, no real serious sign of changes going on here. Let's look at the SMH. Well, no mystery here. Breakdown 55.67. Again, I haven't been talking about this, but as you can see, these inflection points are relatively powerful. This is our long term. 55.67 will be a change in tone on the SMH. Here's the, ouch, ouch, ouch. So 52.23 stops above on the short side. Pre-market, we're trading 52.19 right now. We'll be right back. We'll talk about this a little bit more.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates.
And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We're going to take a look at U.S. Treasuries really quick. Let's see here. You know, even with the news, China's dumping record amounts of U.S. Treasuries, blah, blah, blah. I mean, I read these articles. I mean, I don't know why I read them. We are kind of specifically focused on the technicals. This is one of the hardest instruments to trade on the earth. If you guys have traded U.S. Treasuries, you know what I'm talking about. And, you know, it's really, you know, ask Jimmy Rogers. You can be decades ahead of making sense sometimes on the actual listening to fundamentals and trying to trade this on fundamentals. It is what it is, and that's why we look at the technicals, or I do, on the Treasuries more than, you know, trying to get caught up in all these things. So again, 125.13, big number we caught down there. I still have been way more biased towards the long side, even though we are sitting below, you know, a fair auction that happened a while back on the weekly. I fully believe we can retest that again, 127.11.12. Why is that? Going to possibly get a little more help from the U.S. stock market and a little bit of a, you know, sympathetic bounce in these at the very least is what I'm thinking. So here's the situation. How do you still trade these? Again, stingy traders, I'm looking at below 126 on the stops on this, and then, you know, got to be able to say uncle below 125.13. I know that's a pretty big range from where it's at right now, but that 126.03 is very coincidental to a POC here on our daily from a very wide profile, and that actually means a lot. This is kind of the top of the hill. Remember, if you're looking at, you know, the peak of distribution in a statistical analysis, That's usually the mean of that bell curve. This is the point of control. This is actually the mode. So this is kind of the top of the hill. You roll on one side, you roll down the other. And that means a lot in a wide profile. And that coincides with the bottom of our 240-minute box. So 126.04, below 126, somewhere in there is kind of a stop situation. And that's the way I'm looking at U.S. Treasuries. We got to take a look at gold really quick, cover some of the usual suspects. Give it a heads up here. Where the heck is it? Here we go. All right. No new long news here. No new profiles attempting to appear. Lower price action coincides with lower lows on Navigator. Remember, that's kind of, the big three: breadth, which is not applicable in this stage or this product, profiles, and Navigator. So to keep it real short and simple, here we go. Here's the 240s. So here's your new levels on the 240s. Again, I'm just a bigger fan of trading this off of, and we're getting back in the fair auction already, of trading this off of daily profile numbers and letting the 240s stop me out of this trade. So we got back above here, above 1100, and now we're getting back down below. So again, short-term traders are going to probably have to pay attention to stuff like this. But I don't think the long-term trend is in danger whatsoever for this thing to continue to slide now. So that's where we're at. The first sign would be to be in the scanner and get into the futures section and to see really quickly going into gold here is to start seeing some hints of new profiles attempting to appear. And we saw a little bit of a yellow bar there, but that was just a hint. I'd like to see a new profile lock in, and that's actually not reflected on our charts here because the scanner's actually ahead of it. So we do have a hint of it, but I'd like to see a profile lock in and show new inflection points on gold to even start thinking about looking at this as, the targets have to some degree possibly been met in the interim. Not to reverse the trade, by the way. So here we go. Technology sector, all over the place. Just a wild, crazy animal. Pre-market 42.96. There's really, I don't even advise trading this right now. I mean, we've got a profile that appeared above price action yesterday. That's bearish, but this is extremely volatile right now. Somebody was asking about that, sent an email about it. This is kind of throwing the dice. This thing could, just the volatility alone could stop you out and still be right. Let's go back to the S&Ps here for a second. For guys who missed the early part, this is our 240s, 213 through 14 stops above. The range down here, 2102, 2104, still in force, in my opinion. If we can get a daily close below there, that would kind of start freaking some people out a little bit more on the long side. And again, we're using that methodology by going in here to the dashboard and looking at the disconnect on our breadth situations. Remember, these are going to change a little bit more so as the market opens, because remember, they're based on the internals. And we're going to take a look now at what's going on with the Shanghai, because I've kind of been really interested that this thing could get back into this 4206 area. We're getting close. The high is 4132. Could that be considered the neighborhood here? Yeah. I mean, it might be time to start putting your toe in the water a little bit on the short side here, but I think that level is going to be something to contend with, at least for maybe a couple 100-point pullback on the Shanghai. So just wanted to kind of put that on your radar screen again. We're going to hit the ruble. We don't talk about this a lot, but this has been one of the coolest trades out there based on the long-term view here. Closed above, come back and retesting and just drifting higher. And I think we're going to continue to see the weakness in this. Eddie's pretty much very much in tune with, not pretty much, very much in tune with what's going on in Russia. Speaks daily quite a few times to a lot of folks over there in Moscow. And let's get into crude. This is the last usual suspect we're going to hit today. And again, we talked yesterday about this 51.86 area on the September contract, and This weekly situation is ugly without question, but now you got a profile that appeared above price action. This is just relentless selling. 49.51, new bottom of the box. Let's see. Let's go back to our futures here. There's WTI crude. There's 49.51 bottom, as you can see, mousing over. So again, red across the board, no green shoots happening on any level. That means that not time to start nibbling on the long side. At some point it will be, but right now, again, things on the lows go lower, things on their highs go higher. Short-term stops above 49.51, believe it or not, hard to believe that. And then you've got some more stops above the 50.5 area if you want to stay in that a little bit longer. And then in my opinion, you got to be willing to kind of call it quits above 52 if you're going to play this game down here. That's, the risk reward. I mean, what is the risk reward down here? I mean, where's your targets? Again, I let these profiles kind of stop me out and stay with the trend. That's kind of the way I work with this. Right now, there's a lot of people trying to nibble this thing, and it's buy, stop out, buy, stop out, buy, stop out. The situation has been very prevalent on the S&Ps. Let's take a look at the yen really quick. Again, my favorite trade. Didn't quite get down to maximum support around 123.39. That's where it's possibly time to go a little bit heavier. Here's been the short-term situation on the 240s. That's been met. So again, short-timers, 123.63. That's been met. We're starting to kind of elevate and get back going here. So I don't see a lot of risk in this long trade. Short-term stops 123.63. Longer-term stops 123.39. When I say these numbers, that means stops below based on your appetite for risk. Here's the Australian dollar. Again, the very nice short situation. Nothing standing in the way. Here's where we're going to look at stops above 74.63 now on the Australian dollar and continue to let this thing fall apart. There's really not a lot of things to think differently on that. Let's take a look at IBM really quick. Let's head over there to the stocks again. All right, so obviously the earnings 167.35. We don't play the earnings. We kind of wait for these to come out. And 163.20 was that big number down below before. Now we're below 163.20. We closed below there. It ain't on sale, folks. This is kind of getting back to where this stock probably should have been. I didn't understand the rally. That's what stops are for, by the way, above 169. But now we're looking extremely good on the short side. If the market pulls back at all, this may actually head quite a bit lower. So keep that in mind. Stops above 163.20 on this. Let's take a look at Facebook. This is something else I just wanted to put on the radar screen here. Talked about this one, not one to short, no signs up here, no daily profiles attempting to appear at all. Things on their highs go higher. This can go higher, believe it or not, no matter what the market's doing. Already shown its hand, 96.42. Any breakdowns below there could be shorted. If you've got to short something on, I just don't advise it. It's shown its hand. 98.82 are new breakouts on this thing above there. Let's see. Try to get this out of the way. Okay. All right. So we're going to take a look at a couple other stocks here. Amazon earnings out this afternoon. Okay, so here's the situation on Amazon. It's a runaway freight train on the upside. Doesn't have to stay that way after earnings. This could come down significantly or gap up significantly. Remember Netflix. Got a new profile yesterday, 493.20 up top, and big, huge mega profile. Unfair lows 455 down, 455.26 down below. So, what do you do with this? Those are the big numbers on the daily to pay attention to. again, this may have some super volatility before this afternoon. Here's the short-term numbers: 491, 492, and 479 down below for kind of battle points during the day today. But again, there's no telling, there's no way to know what these reports are going to say. And let's go back to Netflix based on that thought alone. Here's the weekly, and just put this in your head. This can happen to Amazon. Sitting right there, and this is our weekly profile. So again, you know, kind of rattling around up here between 118 and 110. Here's the dailies on Netflix. No new profiles appearing. Nothing to hang on to here. You know, just short side. Not you got way better opportunities on the short side than Netflix. But I can't seem to buy this thing up here though, because I think the market's gonna. If you've been watching this show, I think the market's got a chance to pull back, and I don't want to be long stocks right now. All right, international paper. This is something, you know, was showing some, you know, relative weakness the other week. We were talking about it. Finally got the orange bar, the new profile. Resistance on this is 49.87. Kind of came off there yesterday, but I think that, you know, the trend, some damage on the intermediate, but remember, weekly takes precedence over 240 down the line. You still got a weak stock in a strong market. 49.87 is still resistance on this particular stock. Let's take a look at Weyerhaeuser. Just ugly. Scanner's been on this, and you know, again, you guys have been listening to me like, oh God, it's in the hole. Why would you short this? You got inflection points to lean against, and this is, again, showing its hand. Market pulls back at all. These things are going to fall apart even farther. And I know this is boring, shorting a $30 stock and trying to get 40 cents out of it, or you know, but again, or not trying to get that out of it. It's just kind of what it gives. Boring is good sometimes in trading. If you want the excitement, it might be expensive. Let's take a look at Coca-Cola. All right. Okay, so again, this is, you know, stock that's kind of been languishing a little bit. This is our weekly. This is November, December last year. We caught an inflection point up top. We talked about shorting against this, 41.48. It's come off of it nicely this week, 39.90, 9.40, let's call it, down below. We talked about that. Getting some help. We might have another couple of points in this on the downside on Coca-Cola. So, you know, pay attention to this one, especially if the market can give it some help. Computer Associates, excuse me, not computers. Excuse me, I put the wrong stock up. Hold on. Okay, 3M. This is the one we wanted. Sorry about that. This is one we were talking about actually on the webinar. We're going to talk about this when we get back, folks. 5 minutes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I kind of reflect sometimes on what I talk about. I've been very non-long-ish on the S&Ps for a long time, and that a long time means, bare minimum back to the fall, the beginning of the year when we started, and we haven't been anywhere since the beginning of the year, basically, on the index itself. But I was really relatively bullish before then, and the reason everything turned in my mind is because we started having so many disconnects going on with the internals. And, if you're just catching this show and you say, oh, God, here comes Logan, he's going to talk about short things again, blah, that's where I think, I think the probabilities to get long in a large way right now, and have been thinking this for a while, that's where the risk is. So we always try to take this show and figure out, how to possibly keep people out of trouble. And on the day trading side, and on the here's some inflection point side to pay attention to, looking at these breath situations. There have been some great opportunities, but you've got to use stops, and the leverage on the internals, the stocks themselves, in my opinion, has been to trade weak stocks from the short side. I think we've got Victor from New Jersey on about Intel. And Victor, I apologize. I didn't see the message earlier, so thanks for calling in.
Do you think we're going to hit that? Because I don't know. I'm not too good with these signs, but it looks like you got a Garley sign. You know how you have those, you can read the signs when you put on the Fibonacci, the angles.
On Intel?
Yeah, is it going to hit the 27 or not? Because it's right in that bar there from June 12th of 2014. And
Well,
they say it's, a bullish,
I'm not an expert on Intel. I mean, Gartley patterns are definitely one of the more valid things I've ever seen. But right now, I mean, the way I kind of look at things is, we got to be told differently, and I got to be stopped out of trends. I don't really pick a lot of battles on the long side or the short side unless they hit inflection points that I'm looking at. So again, I don't have the Gartley patterns in front of me, but if that's showing up down here,
put them on, it looks like a butterfly or something like it. But do you think it's going to get in that 27? Because they were right at the gap there, that June 14th. You know where it gapped up? We're right at the bottom of that candlestick there. You know what I mean? Should I buy it or wait a while?
Well, you do have some support here from. Okay, now the good news is from what you said. We do have a big time inflection point on our weekly that was around the 27 area. And I'm glad you brought this up actually now, because there's a hole in the marketplace that's between approximately 30 and 27. So we're kind of right in a fast moving area, so to speak, relative to profile theory. So this hole in the marketplace, which hasn't been covered, actually does have a little bit of an area around 27 to pay attention to. So on a long-term target scale, I don't think you're far off on that actually. But I'm kind of into turning the rents the same way and letting these profiles regulate the trade down, and then allowing maybe at that 27 area to also get some confirmation relative to profiles, if that makes sense.
So you would wait and see what happens, even though it says it's a buy signal.
Yeah, I don't see the nibbling opportunity here yet on Intel. Yeah. I mean, getting back above 29 would be, somewhat of a, green shoot, so to speak. But you got better longs out there than this. Put it that way.
Give me a quick long. What do you long?
I like the healthcare stuff still. I mean, anything in that XLV ETF we've been talking about that for a while. It's the low risk trade. Put a gun to my head and force me to go long. That's the low risk trade.
All right.
Thanks, Victor. All right, guys, we'll pick it up again tomorrow. Stay tuned for Larry, Basil. You got just a stacked deck here at TFNN all day. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.